All right, today we're diving into an investment story that's got everything: radical politics, a huge economic gamble, and some really cool digital tech. We're breaking down Banco BBVA Argentina. You'll see it under the ticker BBAR. Let's get right into it. And really, this is the entire story in one question. On one side, you have what looks like a best-in-class, super efficient digital bank. But on the other, you have the wild, unpredictable, and often chaotic Argentinian economy. It's a massive tug-of-war for any investor. So, let's be super clear from the get-go. This is not some safe, sleepy bank stock you buy and forget about. No way. BBAR is what we call a high beta bet. And all that means is that its fortunes are tied directly and dramatically to Argentina's success. If the country's big economic experiment works, this stock could fly. If it doesn't, well, it could get pretty ugly. Okay, so Section 1. To even begin to understand this bank, you first have to understand the massive, once-in-a-generation shift happening in the country itself. We're talking about a complete pivot from a state-run model to one that's all about private growth. You see, for years, Argentine banks weren't really banks in the way you and I think of them. The government was so desperate for cash and inflation was so crazy high that banks basically acted as the government's piggy bank. They just bought up government debt. This is the crowding out effect. And it meant there was practically zero money left to lend to actual people and businesses who wanted to build things. The private sector was completely starved. And this slide just lays out that pivot perfectly. The entire system is shifting from lending to the government to, well, being a bank again, lending to the real economy. You have to understand, this isn't just a small policy tweak. This is a fundamental rewiring of the entire financial machine in Argentina. And look at these numbers. I mean, they are just staggering. After hitting an unbelievable 211% inflation, the economic shock therapy seems to be taking hold. So much so that the IMF is now forecasting a really strong rebound, looking at 4.5% GDP growth in 2025. This is the big macro tailwind that the whole investment story is riding on. Now, for any investor outside of Argentina, this right here is probably the most important slide. For years, there was a huge problem. Even if a company like BBAR made a ton of money, you couldn't get those profits out of the country. It was a cash trap. But starting in 2025, those capital controls are coming down. This is a monumental de-risking event. It means the profits are real, they're accessible, and they actually mean something to international shareholders. All right, let's move on to the company itself, Section 2. And I love this analogy. If Argentina is the high-risk, unpredictable vehicle, BBAR is positioned as this high-performance, world-class engine that's been dropped inside of it. So what makes BBAR's engine so special? It really comes down to three things. First, it is hands down the digital leader in its market. Second, it's got the full power and tech of its huge Spanish parent company BBVA behind it. And third, its management team has proven again and again that they can move way faster and smarter than the competition. And here's the proof. Check this out. Nearly 85% of all its new customers are coming through digital channels. Think about that. This isn't some old-school bank that just has a decent app. It's a customer acquisition machine that is incredibly cheap and easy to scale up. And it doesn't stop there. 95% of all their products, we're talking loans, credit cards, the whole shebang, are sold digitally. This creates what investors call massive operating leverage. It means that as revenue starts pouring in from this new credit cycle, their costs are going to barely budge. And that is a recipe for potentially explosive profits. And you know, this agility isn't just a theory. Look at this. This is from the first quarter of 2025, right when the whole economy started to pivot. BBAR was already posting a strong 11.4% return on equity. Meanwhile, its competitor, Banco Macro, which was a bit slower on the uptake, was kind of stuck in the mud at just 3.8%. This shows you BBAR's management knows how to execute, and fast. So we've got the macro picture turning around, and we've got a really sharp company. Section 3, let's look at the specific things that are already starting to fuel that growth engine. This number just says it all, doesn't it? In a single quarter, BBAR grew its loan book by almost 16%. This is that crowding in effect we talked about, but it's not a forecast, it's happening right now. Credit demand is surging, and BBAR is grabbing a huge piece of it. And check this out. Management is playing offense. They just locked in a huge deal with Stellantis, the giant that owns brands like Fiat and Jeep. Why is this so smart? Well, when an economy recovers, what's one of the first big things people buy? Cars.
This deal gives BBAR a direct captive pipeline to finance all those new car sales. It's a brilliant move to catch the consumer rebound.
Okay, but we have to pump the brakes for a second. With this kind of potential reward, you know there's going to be some serious risk. It is absolutely crucial to understand the bear case, where this whole thing could fall apart.
Let's be perfectly blunt here. If Argentina's grand economic plan fails, this investment fails, period. It doesn't matter how great the company is. It cannot swim against a tidal wave of national economic collapse. This is the single biggest risk, and it hangs over everything else.
And digging in a little deeper, you've got these four big headaches. We've talked about country risk, then there's currency risk. The peso could tank and wipe out your profits when you convert them back to dollars. Credit risk is also a big one. As they lend more money, it's just a fact that some of those loans will go bad. And finally, there's the accounting, which, because of hyperinflation rules, is just a mess. It creates these wild non-cash swings in the reported earnings that can make them really tough to follow.
Okay, so that brings us to Section 5. Given all this complexity, all this risk and volatility, how on earth do you even begin to figure out what a company like BBAR is actually worth?
Well, the most important rule when you're looking at these stocks is this. You have to throw the standard price-to-earnings ratio right out the window. Just ignore it. Because of those crazy accounting rules, the earnings number is full of distortions and isn't reliable. The much better, much more stable anchor for valuation here is the price-to-book ratio. It just compares the stock price to the actual net assets the bank owns. Now, when we use that correct metric, something pretty interesting pops out. BBAR actually appears to be trading at a noticeable discount to its main competitors. It seems like the market is giving a higher valuation to the other big banks, GAL and BMA, even though you could argue BBAR has the superior digital platform and is executing better. This might suggest its strengths are a little underappreciated. But really, the ultimate long-term bet here is on something investors call re-rating. Right now, all Argentine companies trade at a huge discount because the country is seen as risky. The thesis is that as Argentina stabilizes, that big country risk discount will shrink, and when that happens, the valuation for all the best companies, including BBAR, should naturally rise or re-rate higher. Which brings us right back to where we started. You've got this fantastic, superior digital engine inside the company, but it's bolted into a very high-risk vehicle. For any investor, the entire decision boils down to this one critical question you have to answer for yourself.